Hello everyone and welcome to our next episode of our Sustainability Data Management webinar series. In our series, we specifically deep dive into ESG indicators of our leading partners and data providers. Today we are thrilled to host Morningstar Sustainalytics to deep dive into their controversy solution with a particular focus on the changes of methodology that they announced and implemented in the end of 2025. We will explore the 2025 methodology update and the new differentiation into impact and risk scores. We will look into emerging trends in controversies focused on biodiversity, cybersecurity, and many more. And finally, we will pick on particular challenges like timing, fake news, crisis anticipation, and private market coverage. If you have any questions, please feel free to drop them just in this webinar. Our experts will be happy to help you to answer them straight away. I am Matthias Breyer, Chief Product Officer at WeeFin. WeeFin is the market-leading sustainability data management solution that helps financial institutions to scale their sustainability strategies. With more than 50 integrated data providers, custom scoring, engagement, and regulatory reporting, we really help to solve the problems of the industry in their day-to-day. Our goal is to push the industry forward, to make sustainability available to everyone. Joining me today is Charlene Millet, Director Product Specialist at Morningstar Sustainalytics. Charlene brings 15 years of financial market experience, starting as a broker at Kepler in 2011, then moving into asset management at Robeco, a firm known for its strong ESG and sustainability identity. That's where her passion for sustainability and sustainable finance took root. Since 2019, she's been at Morningstar Sustainalytics, helping European financial institutions navigating ESG methodologies and stay ahead of evolving regulatory demands. Welcome, Charlene.
Thank you very much, Matthias. Very delighted to be there.
Amazing. Thank you for joining us today, Charlene. Let's start with the first topic. It's Q4 2025 and you updated your methodology. We are trying to understand what drove these changes and how do you enhance transparency and regulatory compliance in general at Morningstar Sustainalytics?
Yeah, indeed, we have updated the methodology end of last year because clients and so the market and regulator are expecting much more transparency on our research methodology and clarity on the outcome and the metrics we provide. So we have decided to clearly identify two signals within our controversy research, one focusing on the risk, financial risk, and the other one focusing on impact signal, impact score, so meaning understanding the immediate impact on stakeholder of the companies. So that's really fitting with the double materiality philosophy that is more and more adapted in the market, specifically in Europe.
Thank you for that introduction and that split. That is really helpful for our listeners to understand. A key question that we usually get is trying to understand when we talk about methodologies, what are the underlying indicators and scores that are coming in that bundle that we are talking here today? So what are the different indicators that you have in your controversy solution today?
So the controversy solution provides a structured set of indicators at three levels. What we call the incident level, the event level, and issuer level. So incident is the more granular data you can retrieve with our solution. So it's really the source we use. So we monitor every day more than 6,000 different sources. So with the incident level assessment, you get all the insight getting directly from this news. Then you have the event level. So at event level now we distinguish the risk and the impact, and here we offer the assessment, the responsiveness of the companies facing controversy. And we have also enhanced at this level the qualitative insight and narratives we provide for our users. And then the issuer level, you have the top controversy categories and the fact-checking and the explanation concerning the incident itself. And at this level, we provide also what we call rating change scenarios, so also helping users to get some forward-looking insight based on this incident collected.
This is great, and we will touch on the forward-looking elements of the methodology a little bit later in more detail. But if I understand correctly, you're building up from very raw data and information you get to a final score that is available as well. So having that in mind, I would like to understand from your perspective on how those indicators are actually built into a sustainability-related portfolio management strategy.
Sure. So we can flag 3 practical applications with our controversy research and data. The first one is certainly the risk oversight and escalation process. So we've many of our users use the severity and the redundancy to trigger alert, board reporting, and also watch list companies. And they tie controversy severity to the risk appetite threshold. So they can also build their stewardship escalation from engagement to voting to reduction of investment, based also from the signal offering by the controversy research. A second use case is clearly the thematic and the regulatory alignment. So it's quite easy to map our controversy indicator to material sustainability topics. So like you mentioned earlier, the biodiversity loss, the cybersecurity topic. And you can also easily map the controversy indicator with the regulatory lens. So like the SFDR-PAI, the CSRD impact indicator. So that feed really the narrative around the adverse impact statement, the principal risk description, and so on. And an obvious also use case with our research is certainly portfolio construction. Portfolio construction and engagement. So many of our clients can use the insight coming from controversy to adjust their position size or age based on the controversy risk and impact trend. And you can prioritize the dialogue with the companies, having a clear insight to engage with them and working on the remediation condition.
Thanks a lot for that. That is very interesting to understand. And you just touched a little bit on biodiversity and IT security. Controversy data is very often heavily media and news driven to identify these controversies. Can you give us a few more insights on which are the trends that you see at the moment that are mainly driving those controversy scores in recent months?
Yeah, definitely the two topics you have flagged are the one that are drawing the most attention right now. So biodiversity and ecosystem. We clearly observe the scrutiny rising on land use change, deforestation, pollution incident, supply chain impact. And what the investors are seeking is a clearer traceability and remediation. So how the company will restore if the company is facing an incident, how they verify the supplier standard, all the mechanism in place. So the market is really seeking to understand, okay, when we have identified an incident, a risk signal, how the company is doing to remediate the situation. And the second topic is clearly IT security and data privacy, because we observe higher frequency of cyber incident and data breaches. But the same, we are really shifting from did a breach occur to governance and maturity in the response quality. So the investor, they are really looking for the insight and the qualitative assessment to understand how the company are managing those incidents. And that really complement also all the metrics you can see on the market, like around biodiversity, the footprint, for instance. It's important also to understand, okay, how the company is doing in their trajectory to improve.
That's an important element that probably goes hand in hand also with that future-looking perspective on how the company actually responds to those controversies. A key element and topic we always bring up in these webinars for our clients is the focus on the overall methodology and the current understanding of that methodology, so that our listeners really get a deep sense of what we are talking about. And you already mentioned that you're looking into a lot of different sources like media, NGOs, corporate reporting, academic and research institutions. I would like to understand a bit better on how Morningstar Sustainalytics actually collects and evaluates these resources when they come in.
Sure. So I mentioned it's a daily monitoring. So we have defined an approach that blends analyst-led research with technology-enabled sourcing. So to monitor this very large source of news in media and so on, we use technology, so like NLP or AI, and then we have a team of analysts that are here to perform the fact-checking, the context setting, the assessment per se, classification of the incident, and the final severity risk impact judgment. So it's really a mix of using the technology to digest and monitor all the data with also multiple language, and then a team of analysts doing all the interpretation and assessment.
That's very interesting on how you're combining that technological and human element. A key question from my perspective is maybe on fake news. We live in a world where more and more news and media gets very politicized. How do you identify if an article or something that is being published is actually having the validity and the credentials that you really believe that this can be trusted as a trustworthy source in your analysis?
Yeah, so it's important to note that first, we are not considering social media as a credible sources. So like a tweet is not integrating in our model. But sometimes when a tweet is relevant, many journalists are retaking it. So we have credibility and quality classification of our sources that we review many times. So when a specific sources had some issue with fake news, for instance, we have a signal on those. So we and then when we have the fact-checking process also. So the analyst team has this responsibility to verify, to investigate, to cross-check the fact, to understand exactly what happened and how the company has been exposed to this kind of incident. And also with our sources classification and on credibility and quality. When a news pop-ups, usually when it's very credible and accurate, a lot of media are taking it and speak about that. So yeah, it's really crossing the fact, crossing the sources.
Okay, that's very interesting. And a key element in controversy data is that it is usually a very short-termly used methodology. So timing is a very, very important component here. What's significant importance for the news feeds, information spreading of the companies. So our investors usually try to use that information to take investment decisions on a day-to-day basis. So what is your philosophy for integrating new controversy-related information in the data that you distribute regularly?
Yeah, it's a very good point, and we received the question many times. So we have two guiding principle, I would say. So the first one is for sure timeliness, because the client, they needs to be updated, and they know the incident that happened, but also with stability. So what it means. It means that we integrate the material new event promptly, and our user, they can set up alert on a daily basis to be updated on any changes that happen in their investment universe or portfolio. But we avoid overreactivity to a single source. So as we mentioned, fact checking is super important. And when you bring a low verification items, it can lead to unnecessary volatility on the portfolio. So when facts are emerging, for instance, we may assign like a low to moderate risk assessment, but with explicit information that we will revisit as evidence mature. And it's important for us also to bring transparency and traceability. So every change has documented rational source referencing, narrative expansion. So it's not possible for us to update the database the hour after collecting the news. What our user and client are also looking with our solution is all these qualitative assessment, and it's super important to balance so this responsiveness, speed of responsiveness with the methodological consistency, because it's really essential for portfolio decision and also regulatory reporting.
Perfect. Thank you for that. Having that in mind, how long would you usually say will an individual controversial event stay in the scoring for a company?
Actually, it really depends on the severity, the scope, if there is legal outcome or not, and also the effectiveness of remediation from the company. So if it's an acute but contained issue, it may fail over a month. And if remediation is swift and verified, for sure. But systemic or recurring issue with legal sanction or ecosystem damage can persist for multiple years. So there is no fixed rule.
Okay. One key limitation of controversy data and methodologies lies in the fact that it usually happens after the crisis takes place. And you already started to touch a little bit upon the future-looking element and the possibility to anticipate certain controversies for companies. So could you give us a bit more insights on how you are looking into the methodology to really anticipate future controversy development?
Yeah, sure. So, I always said to our user that controversy by nature are ex post events, but still user indeed can build a forward-looking view, so they can use many different insights we provide. So one of the most obvious one is to identify what we call the precursor signal. So you can look and monitor history of near misses or repeated lower severity event, or some sector-specific early warning. So recurring, for instance, safety with non-conformities or things like that. For sure, the peer and geographical context is also something you can leverage to identify probability of incident. Also with the engagement, you can create some intelligence to understand thanks to the company dialogue, all the outcome and commitment gaps, providing with the on the leading indicator. And one thing we have also bring with our methodology enhancement is what we call the rating change scenario. So what is it? Concretely, so we give visibility on which factors would lead for a controversy upgrade or downgrade. So we also give the transparency of what we are expecting for the controversy downgrading, or if we see some signal that the company is not really taking seriously the issue and an escalation of the incident is very likely to happen. So it's not really a prediction engine, but combining this trend signal and the control assessment helps certainly prioritizing the monitoring and the stewardship.
Okay. A blind spot that we usually have within the controversy methodologies or sustainability in general is in the private market space. Do you also cover private market data, and how do you do that?
So yeah, our coverage, standard coverage right now is strongest for public issuer and also the larger private company with a public footprint. So as of today, we cover up to 19,000 companies, and around 20-25% are private company. And for private markets specifically, visibility is lower due to limited disclosure and limited media signal. But that say, we are working very closely now with our colleagues from PitchBook. So PitchBook is a subsidiary of Morningstar, focusing on private market data. And by April, we are expanding our coverage to start with the what they call the unicorn universe. So PitchBook has a unicorn universe that is also integrated in Morningstar Index. We have a Morningstar Unicorn Index. So we will cover to start these private companies that are. This is a demand we have received from the market, specifically for pre-IPO context, for instance, so giving a lot of insight also on incident for this this company. Usually the market is looking very closely.
Perfect. Thanks a lot for that. As a next step, we would like to talk a little bit more about the methodology update you did. You did quite some significant changes towards the end of 2025. So you created this clearer distinction between risks and impacts on the other side and introduced dedicated scores to do so. Additionally, you focused on the replacement of forecasts by different objectives and moved into the qualitative conditions necessary for an upgrade and downgrade. And you also started to expand the events and narratives that you have in mind. What was the real motivation for that underlying change?
Yeah, it's a good point. So indeed, we have introduced, I would say, three major enhancements to our controversy methodology. So the first one is bringing a clearer distinction between risk and impact. So the regulator and also the client, they want to see both actual harms and impact coming from an incident, but also the ongoing financial materiality and stewardship. And sometimes it's not necessarily a line, or the severity of scale is not the same. It's not because a company is clearly involved in a labor incident, for instance, that its financial value will decrease from the day to another. So a clear distinction from impact and financial risk was required, and once again, both by the market but also the regulator. And also to bring more clarity and transparency, we have a switch from forecast to objective condition. So we replaced our forward-looking forecast, which was what we call an outlook, with a positive, negative, or neutral signal. We switch from this signal to a more qualitative and objective condition that will that can change the assessment of the controversy, and to better understand what would help to upgrade or downgrade the risk and impact. So it is what we call the rating change scenario. And this point, it's important to improve the auditability and the traceability of the and the consistency also of the research. Super important as well for investors that also require to be more and more transparent on the methodology and the data they are using in their investment processes. And the last point is really expanding the event narratives. So we now bring a richer narrative and that enhance clearly the explainability, internal model governance, regulatory reporting. It's super aligned also with all the requests. So overall, this change were made to increase transparency, comparability, and what we call regulatory readiness in an environment where, as a rating agency, as an ESG rating agency, we will be regulated by ESMA starting this summer, actually.
I think the regulatory side is a very interesting topic that you are bringing up. And with that, impact is one of the key narratives and drivers we see in the market in the last few years. Across SFDR or SDR in the UK, the term impact is what basically drives sustainability right now. So focusing a bit more on that clear differentiation of impact and risk scores that you gave us, can you give us a deeper dive into those two new scores and how the separation of risk and impact improves the controversy monitoring?
Sure. So the impact score focuses on real-world consequences to people, so customer, employee, but also to the environment. So here we assess the scale of the incident, the severity, what we call the reversibility, and also the stakeholder breadth. Whereas with the risk score, we capture the issuer ongoing exposure and vulnerability, and we try to scope the financial impact for the company facing this incident. So here we are much more focusing on the control quality, recurrence likelihood, the governance responses, legal also implication and pipeline of this incident for the company. And the clear benefit from this distinction we have bring is offering a better clarity for decision for our user. So like the stewardship teams of our client, they can target risk reduction via governance improvement, for instance, while impact-oriented mandates will prioritize harm reduction and remediation outcomes. So you have better engagement KPI, clarity on the KPI. It also offers better time dynamics. So that means after an incident, impact may remain elevated while the financial risk decline if control improve. So you can also fine-tune your investment decision and also a risk-return ratio thanks to this clarity. And of course, for portfolio and reporting alignment, it brings clear mapping like to the PAI. I mentioned the engagement KPI as well, and the watchlist mechanism. So for user really focusing on financial materiality, they can really focus on the risk signal and make a strong alignment of the controversy insight they are incorporating in their strategy that echo very well their the fund philosophy, for instance. And for the impact mandate, the same, focusing much more on the impact signal to be consistent with the fund philosophy.
I usually try to put things into like an easy context, and I might be making this a bit easier than it is. But basically, assuming we have an oil spill, the impact methodology is trying to understand how severe this oil spill is for the nature, biodiversity, communities close to it. And the risk side more focuses on how quickly can a company resolve this, make sure that it doesn't happen again, and how the actual governance happens. Is that a fair summary?
Yeah, exactly. And a risk signal is much also it's much more adapted to understand also what would be the financial potential financial impact on the company's value. So if we take another example, so some big company like I don't know, Amazon, for instance, we do see with Amazon many controversy on impact side. So we know that they had some trouble with a labor incident and working condition, for instance. We know also that on an environmental perspective, it's not super efficient. But in the meantime, at the short-term horizon, the company is not really challenged on its financial fundamental. The market is still really using the services offering by Amazon, so we are not seeing a risk on the company value. So here, with this distinction, offering double materiality, it's also bring an additional signal to the asset manager, for instance, that are not necessarily ESG, the most convinced ESG player, but it's another, financial tool to manage its risk-return portfolio profile.
Has this separation of risk and impact created any specific issuers or sectors other than Amazon, for example, where you do see a change in how you would assess them today after the methodological change?
So we did not observe a lot of volatility, actually. So I have some figures with me. So like amongst the 6,500 total issuer with a recorded material event, so the most severe category from 3 to 5, the majority saw no change in their overall controversy category, because we do offer now the risk score, the impact score, but we still provide a combining score at the issuer level, but the combining score is the most severe between. It's not an average. It's the most severe from the impact or the risk score. So. No change for the majority. 56% of events retained the same controversy rating category compared to previous. And what we have noticed is about 32% of the issuers saw their rating categories improved. So also because, like the case of Amazon, in many time, even if impact is important, the concrete short-term outcome on financial risk is not so tangible. So many times the risk event has declined or improved as a controversy perspective. And only 4% of the issuers saw their event rating categories deteriorate by more than one category level. So it did not bring so much changes, and we did not really identify a specific sector or type of issuer or geographical trends in these changes.
Perfect. Thank you, Jalene, for a fascinating deep dive into the controversy, data and methodology, and sharing these insights with us today.
Thank you very much.
The methodological updates we've outlined undoubtedly will help many investors out there to navigate a complex landscape in a more efficient way. And as we've heard, a split between risk and impact starts to really differentiate between the social, environmental, and actual impact with the financial underlying risk. Thank you all for joining us today for this webinar on sustainability data management. If you have any follow-up questions, please don't hesitate to reach out to our team. We are happy to help you. We will be back with our next webinar featuring carbon for finance in June. Until then, take care.